Stellar Lumens, sky high is where we are in Stellar Lumens. We have taken off finally after a bit of whipsaw, a little bit of consolidation. And well, there are indications that the worst may be behind us, but that doesn't mean we're out of the woods just yet. When we zoom up on our 30-minute linear chart on Stellar Lumens, I have what could be counted as 5 waves up. This is our alternate green pattern. And since our bottom that we hit on January 22nd, this could be a first wave starting on January 24th, maybe a long second wave consolidation, possibly a third wave here, just about at the standard extension target, fourth wave, and then a fifth wave into the right target. Maybe that's actually the third wave up there, and we're in a fourth of consolidation right now with a higher high to come. Not totally sure. If we already have 5 up, we may be starting our second wave down. So we're going to have to see how this pullback looks. If this is 3 down, there's a couple of things I have to see, and we'd have to see a bit more of action, another 5 up, 3 down, or more than that, maybe a higher rally. We don't know yet. There's a lot of unknowns still. The alternate path, well, in this case, the primary still is our red pattern. So this is actually an A, a B, and a C. And when you look at the shape of this thing, it's got that boomerang shaped thing going on because the weird, unusual proportions, the small, barely visible fourth wave. This definitely still has carries a lot of weight. Even though our C wave has gone beyond standard extensions, typically you don't see C waves go above the 1.618 extension. We're seeing the exact same thing in Bitcoin, Ethereum, Litecoin, a couple of other cryptos out there, where if this is a C wave, we've extended almost too high for this to be a C wave. So what does all this mean in our big picture? Well, when we shift to our logarithmic chart, logarithmic daily chart, first thing I like to mention is that this is available in the description below, so be sure to check out that link if you're interested. But Stellar has a couple of unique things about its big picture structure. The first of which is big picture. This rally doesn't look like a standard 5-wave impulse. You can clearly see some kind of a 5-wave rally structure here, a pullback that's pretty sharp and deep, and then, well, a lot of choppiness as it goes up. We didn't quite hit the 1.764 extension that you'd expect an impulse to hit, yet we didn't pull back deep enough for this to be considered a diagonal either. This actually looks a lot like 3 waves up, and therefore I have this blue pattern here that I'm taking pretty seriously in Stellar Lumens, in which this is a 1, 2, that's a 3, it's a deep wave 4 that did overlap, or at least come close to overlapping where the first wave may be, either this peak or that peak, and we may finish off in the 5th wave, which actually would not be particularly bullish in the, I guess, in the intermediate term, because after a first wave, you expect a pretty sharp pullback, especially if this is a diagonal or something like that going up. But right now, we're not worried about that. I just wanted to highlight that Stellar Lumens does have a kind of a strange pattern. We see something somewhat similar to this in other smaller altcoins, such as Filecoin, Bancor Network Token, and I believe Elrond, in which you have a clear 3-wave structure up, where the C wave has an impulsive structure, and it looks like we have a huge crash setup that we're not going to come back from anytime soon. Nothing like that in Stellar Lumens, so I'm not too worried about that. And therefore, I'm sticking with the red pattern right now, and that is seeing this whole structure, oops, got to undo that, as a wave 1, a big impulse, or maybe a giant zigzag, who knows what is, and we're in a second wave pullback right now. We've pulled back sufficiently deep for this to be a convincing C wave, or I'm sorry, convincing second wave. However, the structure, like with most other cryptos, looks a bit incomplete. And the reason for that is that we, while we did break our A wave, that I'm calling the low that I'm calling the A wave in the middle of the summer, typically you'd expect a 1-to-1 ratio between your A wave and your C wave. That would take us into this peach colored box. We didn't get anywhere near that. We bottomed around what 16.9 cents, something like that, 16.8 cents. And well, that would be about, what is that, 10.6 cents, something like that would be the minimum expected target. In addition, there's some confluence there, because if this is a second wave, well, let's see how far we've retraced so far. We have retraced a non-standard amount, not quite 50%, but more than 38.2%. So if we retrace the more standard 61.8%, that also falls in this box. So you have multiple levels of confluence from different degrees, different structures. And well, it would make it a lot more clear what this looks like. The same applies to Bitcoin and Ethereum, which didn't quite go as deep as I would have expected. In those cryptos, which I actually I can show real quick on here, I would have expected us to at least get down to the low that we hit middle of the summer, which is typical for a big flat correction like we're seeing here, big fourth wave flat. It's you would expect a relatively shallow retrace, but it's too shallow even by those standards. So that is why I'm still a little skeptical that we have this behind us. However, if we are done and this is behind us, we're not going to go any lower. We've got some nice projections overhead, provided that we are following green, which is again the alternate pattern. We need to see 5 waves up and 3 down. I kind of went over that in the short-term picture. We may have the makings of that already in place. Not completely clear yet. This is a pretty convincing looking set of green candles here, but in the big picture, this does look pretty corrective. It looks like a big ABC boomerang thing going on. So big picture, when you like kind of zoom out a bit, it does look more like a corrective bounce. I know I don't have this C wave divided up into subwaves. It really depends on where you think our 1-2 was. Was it this? Probably not, because we had a higher high here. Maybe that's the 1-2 there. Maybe it's down here. However you look at it, it doesn't look like a complete pattern. I'm actually going to draw an extension off of this, what I'm calling the 1-2 up here real quick. If it went down here, you put this here. We actually hit the 2.0 completely. So when you look at, assume that's the first wave, we actually did get enough for this to be the entire correction. If you think that's the first wave, with the December 3rd low being the bottom of our first wave, then we've got a long way to go. A lot of different interpretations for what we're expecting. Now, if we are done with this and we're going to extend, I have some subwave 1 targets projected based on falling into this box. So if we are falling green, expect this box to be a little bit higher than it is right now. But we're looking at anywhere from, was that 35 cents to 80 cents, which is a good ways up from here. That would be easy 2x return just for the subwave 1 alone. And if we get that setup, this looks like a clear 5-wave structure up and a 3-wave structure down. We have some pretty lofty targets beyond that point. I'm actually gonna, well, I could move it from here. So we could go anywhere from 297 all the way up to potentially 515, somewhere in that range. Those are sounding quite optimistic at the moment, considering that we're sitting around, what is it, about 24 cents. So this could be a 5-6x return just for first wave. The third wave could, I'm sorry, for the third wave, no telling how far the bigger third wave could go. A lot of excitement. So this is the time to start considering buying. I'm going to definitely have a lot of alerts out when I see a big turnaround. If we have any confirmations, any clear sign that this thing's about to take off, I'm going to be putting out the buy alerts. So don't forget to subscribe so you don't miss those. And the other thing is, like I said, I haven't bought the tranches I probably should have bought based on my own principles. You buy at the bottom of the third wave and the C wave down. Doesn't mean we don't have a lot of meat left on the bone, as I like to say. There's a lot of room overhead. Even if you end up chasing this and buy it as it goes up, you got a long way to rally. This could be a long rally that could last multiple years if it is behind us. Otherwise, if we drop in the peach box down here, peach, pink, whatever that is, just a great discount sale, it would make me feel far more confident that the worst is behind us, because they didn't have a very complete looking second wave. And well, after a second wave, the third wave is the strongest. And well, if you can buy below 10 cents or something, got a lot of rally space overhead. So until next time, thank you for watching and happy trading.